Hello and good morning, and a very warm welcome to our second day of our live snapshots from the Euretier virtual event. I'm Emma Penny, I'm Managing Director of Feedinfo, and I'm joined today by Simon Duke, who is our Editor-in-Chief. This week we are doing a whole series of talks based around virtual Euretier, and these will last for 10 to 15 minutes. We had one yesterday on the market in Europe. Today Simon's talking about M&A. Tomorrow we have Mike Verdon, who is the Editor-in-Chief of our sister title AgriMoney, talking about what's happening in the commodities markets, which are also very exciting at the moment. And then on Friday, Yuki Wong, who is one of our senior analysts, is going to be talking about what's happening in the market in China. So I hope you can join us for those other two as well. But Simon today is going to be talking about M&A activity in 2020 and what to look out for 2021. If you have any questions throughout the session, please feel free to email them to us at events@feedinfo.com and we'll make sure that they are answered. But I'm delighted to see so many of you joining us this morning. So Simon, just give us a bit of a quick reminder about sort of COVID-19 and how that generally affected M&A activity in 2020 in the animal nutrition market.
Sure. Hi. So morning, Emma, and morning to everyone who's tuned in. It's nice to see you, so many of you. I mean, I really appreciate that. So going to the question, as we know, 2020 was a very odd year, if we are to label it in some kind of fashion. But as expected, given the COVID-19 market context and the resulting economic slowdown, merger and acquisition activity in the animal nutrition sector was slower than in previous years. And I think this was especially true when the crisis kicked off, I'd say Q2 2020 and very early Q3. And now the animal nutrition market did indeed initially adopt this kind of wait-and-see attitude. M&A processes were disrupted and obviously more complicated. I think last year can be seen as a year whereby animal nutrition players, though proven to be robust, had to monitor the constant evolution of the pandemic and the situation and the ramifications it was having on markets. Having said that, while the frequency of M&A deals diminished, I can think of some quite noteworthy big deals. Take the large compound feed production company De Hoos, for instance, who made acquisitions in Poland, Brazil, Spain, and Indonesia all over the year. Or large feed additive deals, for instance, like DSM buying Roma Labs and Biomin, or to another extent, Adissio acquiring from Elco. But now that the worst of, let's hopefully think that the worst of the pandemic is behind us, banks are indeed telling us that M&A activity has heated up again. And it can be expected that further consolidation will take place this year.
Okay, great. Well, it's just been a very, very interesting time for everybody, I think. But just talk us through sort of how some of the sort of mergers and acquisitions work has been done in that virtual environment, because I know that, you know, we haven't been able to travel a lot of the time or go and see people, and a lot of it's had to be done virtually. So just talk us through how that's gone.
Of course, yes. I mean, we've got a very good example right now, you know, by opposite screens, you know, talking to each other through webcams. That's essentially what it boils down to. But if I look at things in a bigger way, obviously local regulations for in-person meetings and safety were crucial and had to be respected, and could even delay or even prevent key steps of the M&A process occurring. We also have to bear in mind that those in leadership positions were in more meetings than ever before concerning their day-to-day operations of their businesses, as well as working to ensure that their employees had what they needed to perform despite professional and personal disruptions. But once companies realized that COVID was here to stay, they started to explore indeed these alternative ways to conduct business in line with their M&A plans. And the whole crisis forced them to rethink their strategies. But even under these challenging circumstances, the predominant feeling which was communicated to Feedinfo is that it remained very feasible to conduct strategic M&A deals. While not optimal, of course, it was possible with flexibility and patience. Companies simply had to accept the situation and move forward to as appropriate, performing due diligence remotely because of these travel restrictions, but it was a necessity to move forward. And while there have been some challenges with face-to-face interactions, senior leaders did tell us that they saw diligence across technology, regulatory affairs, IP, and go-to-market progress with the same relative pace as prior to the crisis. There was some limitations, of course, in terms of operational meetings, but for the most part, they were able to successfully work around this. If you think about it, COVID made engagement with target companies less formal in many ways and more meaningful, as meetings which were once held in boardrooms were being replaced by virtual engagements in people's homes. Now, due diligence, also, you have to bear in mind that due diligence is an M&A element which was already highly digitalized. I think it's more important to place the emphasis on the creation of trust and relation during negotiations. And this can be sometimes more difficult in virtual ways. Some companies are happy to engage in the virtual environment, while others prefer to wait a bit longer. It kind of boils down to the level of relationship you have. Also, some argue that the pace of M&A recovery this year will depend to a large extent on when we can get back to holding these face-to-face meetings and site visits, which, as we know, are crucial components of the process.
Mm-hmm. Okay, no, it's interesting, and as you say, the pace of technological change in the last year, and people adopting these sort of Zoom meetings or Teams, has been extraordinary, and I think sort of something that none of us really could have foreseen, but it will have changed things a lot. But I know you mentioned that there had been quite a lot had actually happened last year. So maybe talk about the sort of, I suppose, the main deals that we've seen in the last quarter of 2020. What happened?
Of course, we compile a quarterly report, basically stating, listing all the big animal nutrition merger and acquisitions that happened in a quarter. So I can go back to the data of Q4 2020 and give you a bit of highlights of what's going to be in the next report coming out in April, very early April. So according to our data, 13 large-scale merger and acquisitions happened in the animal nutrition sector in the quarter. That is less than the 15 recorded deals in the year prior. But nonetheless, given what we've just mentioned about the COVID and the economic slowdown, that's still quite a significant amount. Also, what's worth bearing in mind is that in Q3 already, several of the larger animal nutrition players in this industry announced business growth plans with multi-year strategies, clearly indicating that M&A would be high up on their priority list in the coming years. Take, for instance, the compound feed producer ForFarmers, who announced such a strategy in Q3 and actually delivered on that strategy in Q4 by acquiring a Dutch compound feed producer called De Hoop in October. Q4 is also traditionally a more active period for M&A in the animal nutrition sector, and this was once again confirmed last year. Now, we saw further consolidation in the Northern European compound feed and premix sector with sizable deals such as notably AB Linas Agro Group's acquisition of the KG group of companies, or Danish Agro's purchase of Himmerlands Grovere. There are multiple deals, and I really recommend you check our quarterly reports to have the full lists in terms of talk about the amounts of purchases and the rationales behind the deals.
Mm-hmm. Okay. So I know that you mentioned you're tracking this on a quarterly basis and doing a quarterly report, which is great, and I'm sure lots of people on here today will have seen that, or will go and look for it on Feedinfo, yeah. which is great. What's happened in Q1 so far? Because obviously, I'm based in the UK, you're in France, and I know that for a lot of countries, we are still facing these kind of quite challenging times. But as you say, people are carrying on with M&A. So what's happened in 2021 so far?
So Q1 activity so far is actually quite impressive. I have to say, January has been very busy. Take at Feed Additive level, for instance, a private equity fund called Pritzker Private Capital, PPC, acquired the specialty chemicals producer Vitellis. PPC said it was investing alongside Mr. John Van Hulle, who's the current president of Vitellis, as well as other members of the Vitellis management team. This company operates 10 manufacturing facilities located in the US, the UK, China, and India, and is known to be one of the leading vitamin B3 producers, as well as a producer of beta-picoline niacinamide. Also in January, Arvesta, formerly known as Avevi, announced its intent to acquire all remaining shares in a Dutch feed additive company called Paletal. This full ownership announcement comes on the heels of an April 2020 announcement whereby Arvesta said they would acquire an initial 30% stake in Paletal. And only as of last week, early February, we have there have been two big deals. IFF and DuPont announced they are soon going to complete the merger of the IFF and DuPont Nutrition and Biosciences units. That combined company will continue to operate under IFF. And only last week, EW Nutrition acquired the feed quality and pigments business of Novus International. And as part of that deal, EW Nutrition gains ownership of Novus's production facility near Barcelona in Spain. And other examples of large activity that happened in January, I can think of the merger of two large US agricultural cooperatives, namely Co-Alliance LLP and Harvest Land Cooperative. They will be headquartered in Indiana. Together, the new cooperative will have over 1,000 employees and over $1.3 billion in sales. And we know that they will produce at least a minimum of 400,000 tons of animal feed per year. Also, going back to Europe, last month, a Hungary-based partner in pet food acquired Italian pet food manufacturer Landini Giunti for an undisclosed amount. And to loop the loop, going back to what I said about ForFarmers earlier, ForFarmers, as of 7 days ago, closed the acquisition of that Dutch compound feed producer called De Hoop.
Okay, gosh, lots happening then already in Q1, and we're only, what, 7 weeks in?
Yeah, and the list is obviously a lot longer, so I do recommend you come to Feedinfo and check out everything.
Okay. I think you've sort of, I know when we've been talking, you've sort of said there are some real kind of particular trends that you've been sort of seeing. So, you know, what's stood out for you?
Many trends, I have to say, but if I were to put my finger on one in particular, it's pet food, and namely pet food in America. The pet food industry in the US saw lots of M&A activity in the final quarter last year, with high levels of investment across the whole sector. In Q4 alone, we know at least 8 major investments or business-to-business purchases completed at a total cost approaching $2 billion. This continued investment in facilities and companies suggests that there is plenty of demand over there. For instance, the Carlyle Group acquired a majority stake in Missouri-based pet foods manufacturer Manna Pro Products. The last week of December also saw US food giant J.M. Smucker, known for peanut butter, sell its Natural Balance pet food business to Nexus Capital in a deal valued at $50 million. Also, private equity firm TA Associates and growth equity fund RX3 Growth Partners invested in a company called Mid-America Pet Food. And on the very last day of the year, Manna Pro Products again announced it was going to acquire an online pet subscription service called BullyMake. All this goes to show that companies are seeking to build on this increase in pet ownership. and various forecasts expect pet adoption in the US to rise steadily to between 4 to 5% until 2024. E-commerce sales also grew last year, accounting for 27% of all pet food purchases in the US. Estimates from Euromonitor expect that figure to reach 35% by 2024. It's interesting to note that millennials now account for 35% of all US pet owners, according to the American Pet Products Association, APPA. 73% of millennials who own a pet have different spending habits, with an emphasis on sustainable, healthy food that is good for both their pets and for the planet. Increasingly, as we know, pets are being viewed as members of the family and are treated as such with premium food and treats. APPA reporting that 43% of Americans now buy only premium food for their pets.
Interesting. Sounds like there's a lot of opportunity for people and companies in that sector. So really, to round up, what's your general outlook for 2021, and what should we be bearing in mind or looking for in terms of M&A?
That's a challenging question for sure, because obviously I don't have a crystal ball, but I can say with some kind of confidence that as companies are adapting to this new normal, as we commonly call it, and with global vaccination underway for COVID, we can expect a gradual recovery in the M&A landscape this year, in line, as I said, with the momentum already seen in Q4 2020 and what I outlined for January. And I think it will pick up a bit more, especially when global traveling returns to some kind of normal. But looking purely at sector fundamentals such as health, safety, self-sufficiency, companies are indeed on a quest for efficiency, and dealing with the inefficiencies allows them to better generate economies of scale. M&A is a component of all of this. Pandemic or not, the industry still faces the pressing challenge of feeding a growing population with rising demand for high quality food and animal protein. Agriculture is also under pressure in various countries, and companies will seek to diminish their environmental footprint, and this will no doubt lead to further consolidation. We'll see further consolidation, and it might involve companies also who were not firmly set up before the crisis, or it can involve startups who are growing and especially in the fields of antibiotic replacement solutions or even agtech, and they will be part of this activity, be it through acquisitions or even collaborations. I think also during 2020, this "you cannot do it all alone" message certainly resonated. And the need for collaboration among peers is certainly going to materialize in the animal nutrition sector, because the nature of M&A itself is indeed evolving. Collaborations will be critical to unblock these further opportunities, and they can be in any shape or form. They can be research and development, production, distribution, or even digital partnerships, joint ventures, partnerships, you name it, there are many options out there. Finally, I'd say regardless of the COVID situation, a strong financial position remains a prerequisite, and companies with a solid balance sheet will continue to have better opportunities. So plenty of green lights out there. I think companies can go out and seize them.
Excellent. Well, that's great, Simon. Thank you very much for talking us through what has been a very busy I think last 12 months in terms of M&A, given the circumstances we're in, and it sounds like we're set up for a very busy 2021 as well. Thank you everybody for joining us today, and thank you, Simon, for your presentation, which was great. Again, if anybody has any questions, please do email them to us at events@feedinfo.com, and we'll try our best to answer those and get back to you directly. And please do join us for our remaining virtual Euretier live discussions. These, again, 10 to 15 minutes on an update on what's happening in the market. Tomorrow, we will be looking at what's happening in the wider commodities market. And on Friday, we'll be looking at what's happening in the feed additives market in China specifically. So I hope you're able to come and join us for those, and I hope you've enjoyed today. Thank you for joining us, and Simon, thank you once again.
Thank you. Bye-bye, everyone. Thank you.